for our daily mortgage interest rate update and what the heck is going on with the U.S. housing market. If we haven't met before, my name is Chelsea Winstead. I am a home financing strategist and a mortgage lender. I specialize on the East Coast, but overall, I show up here every day to give you guys context into what is going on in the market, how everything going on in the news and all around the world impacts you when it comes to mortgage rates and buying a home. So today, in general, not a huge update from rates yesterday. 30-year fixed average ranged from about 6.84 to 6.94% today. FHA, the average was about 6.57%. So again, nothing major that changed from yesterday. Big picture is that, again, the major factors right now, if you were like seeing me for the first time, major factors that are impacting and influencing interest rates at the moment are the Federal Reserve policies, inflation concerns, and economic indicators. Tariffs have been a huge kind of ripple in the water. That specifically, the news on tariffs with China and just like overall the global shake there, we have quite frankly not recovered from that since those announcements came out months ago. Now, this is what I will say. There's been a lot of comments over the past like day or so really pushing or asking the question on like, is the housing market going to crash? And I just want to read you like what the definition of that actually means. Okay, so housing market crash sounds scary, kind of is, but really this is what it means. So the definition is housing market crash happens when home values drop significantly and quickly across a broad region or nationally, often by 15% of the home value or more in a short period of time. All right, so this is what triggers a crash, okay? So overinflated home prices, high interest rates, which make monthly payments unaffordable, economic distress, so job losses or recession, tight lending, which means that actually buyers are just unable to qualify for mortgages, or panic selling, right? So like when owners start to like rush and like list their homes really quickly, and this happens before prices fall. Okay, so what happens during a crash is that, first of all, homeowners owe more on their home than the home is worth. That's where like this term of underwater comes into play, right? Home sales will plummet when this happens. Foreclosures will be on a rise. Inventory levels will increase, but buyers like completely disappear. Lenders tighten their reins because like they don't want to risk more forfeiting and foreclosures. And then overall like consumer confidence just like takes a huge tank. Now, I think there can sometimes be a misunderstanding in prices dropping and there being a crash. Okay, so what we like to see is something called a correction. All right, so a correction is a small and healthy dip in home pricing after like a red hot like heat up, or where, you know, home prices are steadily increasing. What's really healthy and normal in the housing market, or especially in like certain cities, states, etc., is that we'll see a correction. Okay, so a correction is more of a reset, right? A crash is a collapse. So the known crash was in 2008, okay? Now specifically, this was caused by bad loans, over leveraging. So like banks, y'all, like that's why today so many like if like for me, for example, I'm a mortgage lender, I can help you finance and purchase a home. The pure regulation that is in place now because of what happened in 2008 is just like unprecedented. Like you have so many disclosures, you sign so many things, you have to be made aware of so many things. But before 2008, this wasn't a thing. There was a lot of predatory lending. There were a lot of just really questionable loan programs that people were offering people. It was just quite frankly a little bit sketch. What then happened is that there were mass like defaults and people that could not pay their mortgage payment. So prices, when this happened in 2008, prices dropped by over 30% in some areas around the country. Now that is what you call a crash. What we've seen between 2002 and 2005 is more of a correction, or even like less than that. It's really just like a slow cool down. So this means that prices have softened, not collapsed. And the reality here is that inventory is still really tight in most places in the country. So this is keeping home values at par and where they are in most places in the country. So if you like doom scroll on here, and there are just a lot of people who try to scare the shit out of you, to be quite frank, this app is very notorious for like scary hooks. It's what gets you to stop. It's what gets you to like pay attention. But so if you are like seeing shit that's like, oh, the housing market's going to crash, it's a terrible time to buy. Y'all, every year, there are always people who say this kind of stuff. But if you pay attention to the news or what is going on, most places in this country are not seeing this happen. So I'm actually going to do a quick rundown. Okay, but let's go through some specifics. So because I'm licensed like specifically in the Southeast, I'm going to hit on a few places and just give you an example of, even if we're seeing like a cool down, right, we're not seeing a crash. All right, so let's just kind of walk through this. So I am licensed in the Southeast, working on adding Jersey, Pennsylvania, and a couple others that are a little higher up over the next couple weeks. So more to come there. But at the moment, let's walk through some of the like southern housing markets. And I'm just going to talk through how, even if we're seeing a bit of a slowdown, this does not equate to a crash. All right, so let's start with DC. So DC's market is experiencing a bit of a slowdown. So as of April, also, just if you watch the news and all of the layoffs and things that are happening to a lot of people that have been employed in that area, what we are seeing is that sales volume has dropped, okay? Now, what this means though, so this is what's important to note. So while sales volume has dropped by 10%, the median home price is still up by 5.9% year over year. That means that area is not crashing. So this does show that, homes are taking longer to sell, so averaging 45 days in the market in the DC area. However, here's what I will say. So there is a surge in listings, so up about 56% last year, which is, for a home buyer, better. So if you were buying this year, this is actually more beneficial to you because you have more negotiating power because these homes are sitting on the market longer. So home values are still maintaining their value and you have more bargaining power. Okay, if you go just a little bit further south, so Carolinas and Georgia are actually still competitive markets, okay? So specifically in Raleigh, North Carolina, there are still situations now. It's actually most of my clients that are out of Raleigh, they actually have to go through and do multiple bids before finally landing on a property. So even if national trends are showing that homes are sitting on the market for longer, there are a lot of cities within the Carolinas and Georgia that are still experiencing really high demand and still limited inventory. So again, market's not crashing. Okay, let's go back up for a minute and talk about Virginia. So Virginia's housing market actually has kind of like different trends based on the parts of the state. However, statewide in Virginia, the median home price is up again 2.9% year over year. So once again, we're not seeing a crash. Inventory has increased, but not a ton, only by 18.9%. And homes are spending about 28 days on average on the market in Virginia. So again, no crash, okay? And this still gives you a lot of bargaining power because the homes on average are sitting for 28 days. I will make a small note. So Northern Virginia in particular, the active listings in that area have gone up by almost 70% year over year. So if you were looking to buy, Virginia, specifically Northern Virginia, has more inventory for you to make a selection from. All right, let's talk about Tennessee. So Tennessee's market is actually showing signs of a transition. This is interesting. So statewide, the median home price is only up by 0.9%. So this is a state where you're seeing a little bit more of like that price cooling, not a huge jump year over year on home values. So inventory has increased by about 16.4%, but homes are spending an average of 57 days on the market in Tennessee. So this would be a great place. This is a great market if you are in Tennessee to go in and be more aggressive with your pricing and to definitely be asking for seller concessions with this kind of data. Okay, let's talk about the bear, Florida. I will just preface this, Florida, because of all of the coastal areas in that state and all the hurricanes that have come to fruition, the insurance specifically and the property taxes in Florida have gone up tremendously. So we have actually seen home prices in Florida decreased on average 3.2% year over year. That is because all of these storms and all of this damage, people in Florida are more likely to list right now because they want to move and not have to deal with this anymore. Now, this is something to note depending on what part of the state you're looking at. Some experts do claim that with climate change, we could see some homes potentially lose 20 to 40% of their value in Florida over the next 5 to 6 years. So I'm licensed in Florida. If you want to buy in Florida, we